Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, February 18, 2015. You're looking at a daily chart of the SPY, but before I get started, I know a lot of you are interested in oil, and oil is getting hit extremely hard after hours, and this goes back to the last two videos that I made for you guys, which was on Friday and Tuesday evening, when I said that if oil breaks on the this was on the March contract, if oil breaks $52, okay, on the oil futures contract, then we should see a quick decline, pardon me, down below $50 a barrel. So we're seeing that move underway. They made an attempt at it yesterday. It didn't work out. They ran the prices back up, and now we're making another attempt. But now we're down about 5.7% as I make this video in oil in the aftermarket electronic session. So we should see lower prices in oil tomorrow in the market, and you'll have a story surrounding oil. Maybe it has to do with a geopolitical event. Maybe it has to do with deflation. Maybe it has to do with the dollar. We'll see whatever story they want to put on oil. It doesn't really matter to us. What matters to us is we were looking for downward prices if we closed hourly below and then daily below $52, and you can go back and check the last two videos. I made mention of that, and we did that, and now oil has accelerated on the downside. And remember, this week should be a weekly top for the price of oil, which means lower prices than just a break of 50 are more likely than not over the next week or two. So we'll talk more about that as the weeks go on. As the days go on. But looks like the oil move is underway. So let's get back to the S&P, and guess what? Today was the turn day plus 1 day, right? So yesterday didn't count because the market was up. So it's today, the 18th, plus 1 day. The market didn't really do much of a turn today. I mean, the SPX and the S&P 500 index, cash index, was down 66 cents. If anybody wants to count that as a turn, that's okay, but I don't count that as a turn. I count that as a flat market, light volume, a little bit heavier than yesterday on the SPDR, the SPY, but all in all, it was a flat, boring, non-eventful, no reaction to the Federal Reserve minutes being released, just nothing going on. It's almost like the market is waiting for something else to take place to react in one direction or another. And that's the feeling I'm getting. And the fact that oil is selling off significantly after hours, somebody is going to have to put a story to that tomorrow. Okay, oil just doesn't sell off for no reason at all, 5% on a shot, and then without a story attached to it. So we'll look for that, and it may be attached to a geopolitical event. But either way, I'm looking for lower prices in the stock market tomorrow morning. Could be anytime tomorrow, but I just sense it's tomorrow morning. But I don't know how much lower. It may only be 10 handles in the S&P, maybe only down to 2084 in that neighborhood, 2085 in the S&P E-mini. That's where I do my calculations. And that's really just $1 in the SPY or 10 points in the S&P. And if we get closes hourly below that, below like the 2084-85 level, if we get hourly closes below that level, then I would expect to see lower prices, potentially all the way down to 2070. And I know I mentioned that number last week, and that's a ways down from where we are based on a daily basis, but I still have that come up in my calculations. But we have to achieve certain levels first. And this is where we are. Right now, we have to have, it looks to be that we have to have either the turn day workout plus 1 day, and maybe coupled with some kind of a catalyst tomorrow. We'll have to see how it works out, but certainly today was a flat day. Looked like the market wanted to go lower, but the volume just wasn't there. And in order for the market to go lower, you have to have the volume behind it, pushing it down. We didn't have it this morning, and that's basically what caused it to float up the rest of the day. There's just no other way to describe it. All right, so that's basically all I have in the market. So we talked about crude already, but just as a flash, let's go over to USO. And let's see what we're looking at. So a 5% down move in crude as it stands right now would equate to, let's say, could be as much as, I'm going to say 75 to 90 cents in the USO. It's hard to tell because these things don't trade, in lockstep with the futures contract. So I'm just kind of ballparking that. It's very hard to pinpoint that. But that would certainly put us at a pierce of the 20-period moving average tomorrow. And if we came down in this area and broke 18, you can probably look for a pretty strong bounce on a pierce of 18, maybe down to 17.85. That would be a good intraday buy level if you're that type of a trader. So just giving you an idea, because I do think the market will bounce on a pierce of $50. Whether that happens overnight or whether it happens during the regular pit session tomorrow, who knows? But I'm giving you everything I got, everything I know. I'm trying to just transfer the information, do a little bit of a data dump with you. So that's about it for oil. I talked about oil enough. All right, I think we're ready to move forward. Let's talk about the bond market, because there was some wild action today in the bond market. And so here's the deal. During the or right following the Fed announcement, okay, we saw a pretty wild spike. This is the 10-minute chart here of the TLT, okay? So right around the time of the announcement, we saw a spike up in the TLT from 26.75 all the way up to 27, what was the high? 75. Okay, so that's a pretty good move in this type of security, right? It doesn't move that much. And if you just want to do the comparison, let's look at the 10-year yield. Okay, if I can get the chart in front of you. Okay, so this is the TNX, this is the 10-year yield, and you can see the drop-off in yield when that announcement came out from all the way up at, let's just say, 212, all the way down to a low of 2.04. That's not normal movements in the yield in the bond market. So the bond market was wild right around the Fed announcement. Then it settled out a little bit. But what I think, and let's go back over to the TLT, okay, I've been telling you, I want to go to a longer term picture here. I've been telling you that my comfort level in buying the bond market or the TLT in here was between the area that we were at yesterday and down at 124.25. And then I said I wasn't sure that we're going to get all the way down to 124.25. So take an opportunity, take a half a position. And I think, nobody's sure, nobody knows for sure. But when I look at probabilities and how I analyze the markets, in this particular market, the probabilities are telling me that this is going to hold for a couple of weeks, and then we'll have lower prices in the future. This level may hold, it may not later. Everything will be recalculated if we rally from here, and where we rally to, I'll get a better picture if we do have some follow through over the next day or so. So I'm going to be watching the bond market and the interest rate market, and I'll keep you abreast of everything that I know as we go along. So did we talk about gold? Let's do gold. Okay. Gold market also put in a what could be perceived as some kind of a bottom today. And I've been saying that this is a buy area for gold. I said 116, Pierce of 116 was a buy, so we overshot it by about $1. But the market's now at 1640 and the GLD on today. And, what happened was gold, the price of gold futures went all the way down to, I think 1197 or 1195, something in that neighborhood. And then it reversed up, closed at 1212. We have a lot of work to do on the upside, and we have a pivot on the upside that we have to get through, which is 1234, 1235, in order to slingshot up to the next level, which would be up in this area. But for now, I'm comfortable that we may have put in a near-term bottom here in the price of gold. So, we'll see how that works out, but this level should be good support. That 116 and that 1200, I had 1212. Remember I was telling you 1212, and where did the market close today? About 1212. So I'm thinking that 1212 is important, even though we overshot it. It wanted to go back to that number, and that's where we sit right now as I make this video, 1212 and change. So that number's important, and I think that's our first level of pivot area, and then the next one's that 1234, 1235 area. area. So we got to get up there. But that's the next area of resistance that I'm looking for. So hopefully we'll get some follow through and then move forward in gold from that perspective. That's everything I have tonight, folks. That's basically the whole ball of wax. Hopefully it's helpful. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.